We're going to move on, though, quickly here to China. Voters heading to the polls Saturday for Taiwan's hotly anticipated presidential election, with the results expected to have major implications for the relationship with Beijing. At the same time, more weak economic data coming out of the mainland, with CPI weakening and 2023 exports posting their first annual decline since 2016. So for more on all of this, we're joined by Shehzad Qazi. He is COO and Managing Director of China Beige Book. So I guess let's get started first with the Taiwan election, since those are coming up here right around the corner. What are the current expectations, and then what are the implications of that, particularly as it pertains to this contestable relationship with China?
Yeah, the expectation is that if the DPP continues to be in power, you're going to get a very aggressive reaction out of China pretty much right at the outset. We've already been seeing the spy balloons. We've been seeing the fighter jets coming into Taiwan airspace. We get to see much more of that. So the military maneuvers get more aggressive, which is very risky. Think about accidental war breaking out. And of course, the secondary component is economic punishment, the economic coercion that we hear coming out of China, potentially tariffs, potentially trade war, certainly maybe even getting rid of at the very least, the concessions on certain items that Taiwan enjoys today. So it could get pretty hot pretty quickly. KMT comes into power, maybe not so aggressive. The long run looks very risky still.
So either way, we could be in potentially for some more turbulence between this relationship. Okay, and what can you tell us about this economic data, sort of looking at the Q4 data that's yet to be published, so you have some insight on?
Yeah, we actually have released our own economic numbers on China, and what we're picking up, number one, is this. The economic recovery after COVID that we expected to see in China, you got some of it. It was disappointing, but even that is completely over. The real estate market is in deep trouble. Consumer spending is down massively. Manufacturing is holding on, but that's about the extent of the good news there.
Well, so I guess the question for markets is, have we priced China effectively? Clearly, structurally, this is a different economy than it was. It's probably going to continue to be a deflationary force, even though there's a lot of onshoring, which is inflationary. But I guess my question is, do you think the administration, and in terms of stimulus and in terms of what they can do to at least jumpstart this economy, is going to be meaningful in any way in 24? But we're the markets guys, but do you think people have overreacted to China in terms of the macro?
Yeah, I think markets right now are just betting. Those who are betting positively on China are betting on stimulus. And my message is stimulus in China is going to be probably a lot smaller than those with more bullish outlooks are expecting to take place. A lot of it, I think, the problem is pushing on a string. Monetary policy easing has been happening for over a year. Credit costs have been falling rapidly. It's just not making a difference. The property market is still not being able to find a bottom. Companies are not borrowing out there.
It's interesting, too, because this is a week when Japan, after 37 years, finally got to all-time highs again. I'm not going to compare them to, but there's a credit dynamic and a housing bubble that blew up in Japan. And this is what happens with a credit crisis. It actually takes it's a cancer that takes a long time to clear through. Sounds like you think some of that is at least the dynamics there are part of this.
Yeah, I think that's absolutely true. The property story is going to be with us for several more years to come. We're going to get more developers potentially blowing up in years to come. And we're never getting back to property that's the big juicer of growth it used to be.
Shehzad, we're always looking for the unknown things that are going to happen, the things that are the black swan events. So this has been telegraphed pretty accurately going forward. But to Tim's point, there has been a bounce coming, or we've thought there was supposed to be a bounce coming. Is there a chance that we're going to see an off the cliff approach with China this year, where or will we just not? Will they rush in with something? Because it seems like it's a very desperate country, a very desperate economy, and it feels like everything is failing. Do we know the real depth of this? Is there an outlier event in your mind?
So there isn't an outlier event. I think there's a more disappointment ahead for sure, not necessarily catastrophic. But if you want to look at the upside, by the way, for a second, you could see that in the second half of this year, the property market actually stabilizes. And maybe that does have a positive effect on Chinese households. So we can't completely discount that. The main thing to go back to is China is not coming out with billions and billions of, dollars worth of spending happening in the economy and then the type of big stimulus that we used to get back in the day.